We're very lucky to have today with us two of our honorees, John Paulson, Alex Fotakidis, and Nikos Stathopoulos, who will be honoring later on tonight. Thank you.
Well, good afternoon, everybody. I know it's been a long day and we're getting near the end, but I must say this is the best conference I've been to, and I've been to many of them over the last 10 years. It's been some things are very similar to when I attended the first conference. You have basically the same people here, a group of very smart, well-educated, entrepreneurial investors, but that is the same. What has changed is the economic outlook in the economy. In the past, the economy was in severe distress. As you all know, unemployment rising and Greek, risk falling out of the world economy. And it shows you the difference. The change has really been in the government. And I think what we learned, if we hadn't already known, is that governments that focus on big government, overregulation, confiscatory tax policies, large transfer payments, and a focus on spending and receiving rather than producing are doomed to failure. The change, on the other hand, governments that focus on growth, efficient regulation, a fair, reduced tax policies, support for business, support for innovation, reward work instead of receiving are those that prosper. And that's what we have under this government, and the transformation of the Greek economy under the leadership of the Prime Minister Mitsotakis has been exceptional. And I'll give you one experience. It was my experience in Piraeus Bank. We've been an investor in a long time, and it's been through ups and downs. But when the Prime Minister was elected and we saw the change in the economic policies and what those policies could have on the investment sector, we agreed back in 2021, together with the HFS, to lead the recapitalization of Piraeus Bank. We became the largest private shareholder with about an 18% stake, and together we raised $1.2 billion at about $1.10 a share. And since then, it's been a remarkable turnaround in the banking sector. In the net performing loans are down dramatically, earnings are soaring, capital buffers are expanding, and return on equity is climbing. As a reflection of this impressive performance, Piraeus stock alone is up 120% this year and 200% since the recap just 2.5 years ago. But the benefits of Greece's economic turnaround go well beyond banking and are broad-based. Just this year, the Greek stock market continues to rise. It's up 38% again this year. And the Greek real estate market is one of the best performing in the world. Residential prices were up 14.5% in the first half of the year, compared to a decline of 1.7% in the euro area. And the benefits are broad-based. The unemployment rate, as you know, has declined from about 20% to about 10% today. And importantly, which will continue to have a major impact, Greece has returned to investment grade status, and that's going to benefit not only the credit market, but the equity markets as well, as we anticipate many long-only investors will start to invest in 2024. So the accomplishments so far have been numerous, big and bold. The question is, what does the future mean? And, to me, it looks like we're just at the beginning of the transformation and turnaround in Greece. I believe these favorable trends will continue for at least the next 4 years during the second term of the Mitsotakis administration. And importantly, if Greeks continue to pursue these pro-investment economic policies in subsequent administrations, then this prosperity for Greece can extend for decades. Greece today has about half the per capita GDP of Germany. There's no reason why Greece can't continue to narrow that gap and one day exceed Germany. Ireland has one of the highest GDPs per capita in the world, almost 80% more than Germany, by pursuing very aggressive, consistent pro-growth policies. And Greece is on that trajectory today. So I believe we are only at the beginning of a lengthy, virtuous investment cycle. From my own perspective, I think it would be way too early to exit the Greek market. I believe that there's a lot more room to run. And in essence, if you're not a seller, I'm a buyer of the same securities that I own today. Looking at Piraeus, for example, although the stock has risen so much, it still only trades at 4.4 times earnings and 50% book. That's about half the valuation of your average bank in the US, and a slightly lesser discount from Europe. So there's still enormous upside in stocks, bank stocks as an example. The real estate market also has plenty of room to run. Despite the already eye-catching performance, real estate prices in Greece still remain approximately 10% below the 2008 peak. In the US, prices are now 80% above the previous 2008 peak. Many other attractive investment opportunities exist in Greece. And with the influx of prodigious EU next generation funding and substantial amounts of private investment capital, economic growth is bound to accelerate. Unemployment will continue to decline, and wages will continue to increase, raising the standards of all Greeks. I'll give you an example. If it's, some people feel it's too late, they may have missed it. And when I started in investing, I joined Odyssey Partners in 1982. And the partners had made an investment in a bankrupt company at $6 a share. It's hard to repeat this investment, but the direction is what I want to focus on. When I got there, the stock was 35. And I said, oh crap, I missed this investment. And the partner said, no, it's still a great time to buy. I said, how could I buy a stock for 35 when you guys bought at 6? They go, there's so much more upside. I said, no, I'll wait for the next one. And then I watched the stock and went to 40, 45, 50, 55, 60. At $70, Soros filed a 13D and the stock jumped to 80. I said, how could Soros pay 80 when these guys paid 6? I should have bought it at 35. And the guy's partner said, no, you should buy it. Soros, his average cost is 75, it's 80. You should buy more. I said, how can I buy it 80 when you... And then the stock went up to 85, 90, and Soros amended his 13D with an additional filing. He had paid over $90 a share, and the stock jumped to 100. In the end, the stock settled in bankruptcy for 160 a share. So the point I want to make is though the market has risen, it's important not to look where it's come from, but where it's going. And where it's going is still a lot of potential. One measure is the value of the stock market to the total economy. It's about 30% in Greece today, and the previous peak was 80%. And the European average historically has been around 80%. So there's a lot of, I think, given the economic outlook and where we are, there's tremendous opportunities in Greece. And I know we continue to maintain our investments and also look for new ones. So to conclude, like the proverbial phoenix, Greece has risen from its predecessor state to become a new European leader. And all of us, I think, are really still at the beginning of this transformation. Thank you all.